Hey, welcome to our lesson on deficits, surpluses, and the national debt. A couple terms that we have to go through first. These are important to know not just for economics, but really for life. To be an informed citizen throughout the rest of your life, it's useful just to know what we mean by these two things, and a lot of people don't know what we mean by these two things. And the big terms that can often get confused is a budget deficit versus the debt or the national debt. So a deficit is the amount is basically the shortfall of money in a given year. So if in a particular year the U.S. spends $500 billion or half a trillion dollars more than it brings in tax revenue, we would say there was a budget deficit of a half trillion dollars or $500 billion. The national debt is the total amount that the government owes, not just from one year, but from all time. So the debt is the accumulation of the deficits from every given year. So if you had a country that existed for 4 years and had a deficit of $500 billion each of those 4 years, right, the national debt would be $2 trillion, the 500 billion times 4. So the national debt's the total indebtedness at any given moment in time. The deficit is the amount within a period of time that's been added to the debt. There are times throughout our country's history where the country has actually run surpluses, brought in more in tax revenue than has been spent. When that happens, it's called a budget surplus. You'll see these are Zeke points, deficits versus the debt. It's something you should just know. Not even just for the class, just to be an informed citizen of the world. You should know the difference between what a budget deficit is and what the national debt is. What I'd like you to do is take some time and find out what right now is the national debt in our country, and how much is it per family. I think this is something you should do. The reason I don't put this on here is because depending when you watch this, it's going to be different. I would have to update this daily to come up with an accurate estimates on the national debt. But go find it. It's not tough to find. Find out what is the national debt and how much is it for a family, or perhaps if you just would rather go per individual, you could do that. What's your share of the U.S. national debt? We are going to start with an overview of what deficits have looked like from year to year, with basically the past 50 or so years. See, the deficits looked very, very small. The first from 1960 to the early 70s. They started to expand. If you imagine from this point of view, right, if you're at deficits of 3 and 5, and then you start getting deficits of 50, that's going to look very large. But those 50s didn't look so large once we started getting deficits of 120, 221, peaking at in this moment in time, peaking at negative 290, and then getting smaller and smaller until we actually had a surplus in the late 90s, early and in 2000. We had surpluses. The surpluses went away with the recession and with the wars in Afghanistan and Iraq. And so you see through the George W. Bush administration. Here's debt versus GDP. Actually, I'm going to skip this for a moment. No, I'll go back to this. So debt versus GDP, and this is a different one. So this is looking at how much accumulated debt the U.S. has relative to the annual production of the country. So similar to what we saw. So the last one started in the 60s. The debts were pretty small. Our country kept growing. And the economy kept growing. So the debt as a percentage of GDP shrank, went up in the 80s, shrank again in the 90s, and in the past few years has really increased. Federal deficits, again, this is a little bit more recent. through 2008 reflects the George W. Bush administration. Then is the Barack Obama's administration. These are the first $1 trillion deficits within, you remember, deficits within 1 year, came starting in 2009. And this is debt as a percentage of, or deficits as a percentage of GDP throughout the presidency on average. A couple other things to, kind of terms to go through: on-budget versus off-budget deficits. So Social Security, the money we bring in for Social Security is paid to those who paid into the system throughout their lives. So we try to keep, that money is not really meant for other purchases, so it's tried to keep separate. It's called an off-budget item. Other government revenues and expenditures are called on-budget items, whereas the overall budget surplus, or you could call it the budget deficit, would be the off-budget surplus plus the on-budget surplus. Just technical points on Social Security is the money brought in from Social Security is supposed to be dedicated for those who are being paid from Social Security. So with the debt, and like with a lot of macroeconomic arguments, there are a lot of debates of what goes on. What we're going to do in the remainder of this clip is discuss what are some of the arguments about the burden of the debt, the burden of the national debt that are made, which ones are a little bit more legitimate, which ones aren't as legitimate, which ones are, when you start to peel the layers on the argument, they really don't make much sense. Some of those, well, some won't. First argument we'll look at: the debt will cause a burden for future generations. This one really depends, and in fact, the way that economists teach this one has really changed a bit over time. It really depends on the amount of debt held by future generations within the country. So, what amount of debt is held by U.S. citizens? If all debt is held by U.S. citizens, well, then to pay back the debt, we're paying other people in this country. Well, if that's the case, right, it's not really going to burden future generations overall. Now, some people will be paying other people, but overall, future generations are not harmed. That said, if people outside the U.S. own debt, that means future generations of Americans will be paying future generations of, say, Chinese. Then this argument's a lot more legitimate. When I first started teaching macroeconomics, I actually called this a bogus argument about the debt. That debt would cause a burden for future generations because so much debt was owned by U.S. citizens. The percentage owned by U.S. citizens is getting smaller, though. It's still a majority, but other countries like the U.S. debt because it's safe. They like to invest in U.S. bonds, U.S. debt. And by their doing that, you're going to have Americans paying back people in foreign countries, and this will cause somewhat of a burden. So that one depends. But for now, I would say yes, it is legitimate somewhat, because the amount of money that we pay back to other Americans really isn't a burden on future generations. What about an argument, repaying this debt is going to ruin the nation? There's a bit of validity. Once again, it's tied to how much you're paying to people in other countries. Where some of this validity is lost, you never really have to pay down the debt. Now, if you don't pay down the debt, though, you are paying interest payments always. But once again, if you pay people within the U.S., if some people in the U.S. pay other people in the U.S., as a whole for our macroeconomy, the country is not getting weaker. If you're starting to pay people in other countries, the country could get weaker. What about the argument that the U.S. risks going bankrupt? Well, this one we can call this one a bogus argument. The U.S. does not. We could print money if we wanted. We're not going bankrupt. A national economy is not going to go bankrupt like companies could, or sometimes even local governments could. The U.S. has an enormous power. Right now, we're at no risk. We're really not at much risk of going bankrupt. Now, there are things we could do that are really not very smart, like printing money to pay for the debt. That would be really stupid. But the idea that the U.S. will go bankrupt, that one's not going to happen. Interest rates. If your debt is too high, what could happen? Well, if you run large deficits, that means you have to sell lots of bonds to pay for the deficits. If you're selling lots of bonds, the supply of bonds goes up, the price that you can receive for the bonds should drop because the supply is up, right? Price down, quantity up. But that means interest rates are higher. Well, if interest rates are higher, that should make firms less likely to make new investments. This is an issue. So interest rates could go higher. The implications of that are not good, right? If interest rates are higher, investment becomes more costly for firms. Firms might invest a bit less. There's also the idea of crowding out that's going to be mentioned a bit more in a moment, where government might replace some private investment. So you do have higher interest rates could be an issue. Budget deficits and inflation. If you run budget deficits, right, aggregate demand curve could expand. That could cause a higher price level. So you could see that. The main huge worry about budget deficits is if you had a Federal Reserve that started to print money to pay off the debt. That could certainly cause inflation, and fast. That is, in fact, how some of the episodes of hyperinflation happened in the past. The economists in the Federal Reserve know this, though, so it's very doubtful that you're going to see money being printed to pay off the debt explicitly. Slower economic growth. Well, this would be tied in with the idea of interest rates rising. So if to sell bonds, interest rates rise, investment might shrink, and you'd see less economic growth. So there's several arguments about the burden of the debt. Some are a little bit more legitimate, some are less legitimate. Within macroeconomics, these are often arguments, right? These are debates among economists themselves. So I don't know that it's as important that you have a side on this, but it is important that you know some of the ideas of what's argued about with the burden of the debt, like slower economic growth and the fact that the percentage of debt that's owned domestically has a big influence on how big the burden of a debt is.